Hello friends. In this video, we will see about assessment of firms. First, we have to know what is firm, what is partnership, who is partner. Firm is the entity which comes into existence as a result of partnership agreement. Then, what is partnership? Partnership is the relationship between two or more persons who have agreed to share profits of the business carried on by all or any of them acting for all. The person entering into a contract with one another individually called partners, collectively called firm. Partner is any person whose minor has been admitted to the benefit of the partnership. Computation of total income of the firm. Income should be computed headwise. Firm cannot have salary income. It cannot have self-occupied house. Income from house property is computed under section 22 to 27. For computing firm's business income, provision under section 28 to 44 are applicable. Section 40 subsection B, salary, remuneration, commission to working partners are disallowed. Interest to partners as per partnership deed, it should be disallowed in excess of 12% while calculating business income. Allowed limits for remuneration under section 40 subsection B. 1,50,000 or 90% of first 3 lakhs of book profit, which is more, should be added to the 60% of balance book profit. Should be compared to the actual remuneration, which is less is allowed. Treatment of remuneration paid to the partners of their individual salary. If it is fully allowed, fully added to the individual salary. If it is allowed up to certain limit, actual remuneration divided by total remuneration of the all partners should be taken for the individual salary. A firm under section 185 not submitted the copy of partnership deed. Any payment to the partners is disallowed. Rent paid to the partners is allowed. Partnership deed expenses is disallowed. Interest on capital is disallowed. Interest on drawings is fully taxable. Income from capital gain is computed under section 44 to 55, but no exemption allowed under section 54, 54B, 54F. Income from other sources is computed under section 56 to 59, and set of carry forward is computed under section 70 to 79. Allowable deductions for assessment of firm: 80G donations, 80GGA contribution to certain funds, 80GGC donation to political parties, 80IA infrastructure projects, 80IAB for setup in special economic zone, 80IB new industrial undertaking. (80IB) profits and gains from housing projects, 80IC setup of industries in backward states, 80ID for setting up of hotels or convention centers, 80IE undertaking in northern states, 80JJA use of bio-waste, 80JJAA for employment to new employees. Tax rates: flat rate 30%, long-term capital gain 20%, long-term capital gain on shares, STT paid 112E more than 1 lakh 15%, short-term capital gain 15%, casual incomes 30%, health and education cess 4% of tax plus surcharge if any. A small test. Find out whether the following expenses are allowed or disallowed while calculating business income. Salary to working partner B. It is disallowed under the head of business income. Salary to employees. It is allowed. When the firm is allowed interest on capital at 16%. Interest on capital up to 12% is allowed. In excess of 12%, which is 4%, so the 4% interest on capital is disallowed. Donation given to charitable trust. It is disallowed under the head of business income. Income from interest on securities. It is disallowed under the head of business income. Book profit 7,80,000. Salary paid to the partners 2 lakhs. We have to calculate allowed remuneration. 90% of first 3 lakhs of book profit is 2,70,000. 60% of balance book profit is 2,88,000. We should add that amount. The total is 5,58,000 or actual salary 2 lakhs. Whichever is less is allowed. So 2 lakhs is allowed as per section 40B. Book profit 1,20,000, actual salary 50,000. How much amount will be allowed in business income? 90% of first 3 lakhs of book profit, but here we have only 1,20,000 as a book profit. So we calculate 90% on 1,20,000, which is 1,08,000 as compared to 1,50,000, whichever is higher is 1,50,000. That amount is compared to actual remuneration of 50,000, whichever is less is allowed. So 50,000 is allowed. Guess which of the following deductions can be claimed from the gross total income of the firm. ATG, ATC, ATD, ATJJA. ATG can be claimed, ATC cannot be claimed, ATD cannot be claimed, ATIIA can be claimed. ATIBA, ATTTA, ATIB, ATU. ATIBA can be claimed, ATTTA cannot be claimed, ATIB can be claimed, ATU cannot be claimed. Thank you, friends.